Welcome to our weekly show focusing on the key macro trends affecting FX and the broader market. And this week, we'll be looking even more closely at the metals and mining sector, which is continuing its incredibly dramatic run. And could this be a generational rotation into new market leadership? You see, over the last few weeks, gold, silver, copper, and the mining sector in general have been a regular feature as we focused on the biggest stories in the market. But despite these historical advances, outside of gold, the mainstream media coverage remains relatively restrained. But could this be about to change? So let's look at what's happening. Now obviously gold has surged. Even when the y-axis is converted to a logarithmic scale, the move is impressive. Gold has now breached the $5,000 per ounce barrier for the very first time. We also have silver through $100 per ounce for the first time ever. And we've kept a normal y-axis here to give a sense of the drama involved in this move. And the bullish fervour has spread outside of precious metals, with copper also at a new all-time high and about to hit $14,000 per metric ton. So the metals are doing very well, but for this to be a structural move, we'd like to see confirmation from other assets and relationships too. In FX, the Aussie dollar, a commodity currency, has started to move higher. For a sustained move, this usually requires both commodity prices and export volumes to rise. Of note, however, is that the move in the Aussie is not just because the US dollar is weaker. The Aussie dollar is also going higher versus the euro. And the ratio of the mining sector versus the tech-heavy Nasdaq has also surged in favour of the miners, suggesting that leadership is changing, driven by government liquidity and the realisation that resource scarcity is a reality that can't be ignored. Finally, if this is a shift to a weaker dollar and stronger real asset regime, then emerging markets should also be outperforming. And we can see that the ratio of the S&P versus the MSCI Emerging Market Index is now starting to roll over too. So in summary then, we can see that many of the features we'd expect with a change in leadership are now starting to take hold. Precious metals have been flagging this for a while now, but other assets are also now starting to confirm that this move looks real. So now let's look at some of the questions we've been getting from our viewers.
Okay, so question number one. How important is the US dollar in this scenario?
Well, arguably the US dollar is the pivotal factor. And you may recall that a weaker dollar helps support commodity prices and the performance of emerging market equities. And we've previously noted that the US dollar is testing the 15-year support. Now, a convincing break lower would add further fuel to the thesis that hard assets and international equities are now starting to take the lead.
Okay, so what other global instruments are there for trading precious metals and miners?
Well, obviously most people trade metals via futures and CFDs on things like gold, silver and copper, whilst platinum is another of the precious metals that's also been on a tear recently. And there are a number of ETFs across the sector, including GLD for gold, XME for broad-based miners in the US, and the SXPP index based in Europe that includes some of the heavyweight global miners such as Rio Tinto, Glencore and Anglo American. And there are many individual mining stocks in the gold and silver sectors, but these can come with significant stock-specific risks. Therefore, most people prefer the broad ETF exposure of the gold miners via the GDX or silver miners via the SIL. And for those wanting additional specialisation, the REMX is the VanEck Rare Earth and Strategic Metals ETF. And finally, in the FX space, traders will also be looking at the reaction from the Canadian dollar, the South African rand, and the Chilean peso, to name a few.
And finally, will crypto do well in this environment?
And this is an interesting one because the conditions that have supported gold and silver should also support Bitcoin. But one of the issues for Bitcoin today is that it's now competing for attention with these other assets. Therefore, if the price action is better for precious metals, that will divert funds away from the crypto space. And that doesn't change the crypto thesis, but it can start to alter its relationship with liquidity. Okay, that's it for this week, but before I close, please remember that none of this is investment advice. It's for education and engagement purposes only to help you with your own investment ideas and research. When investing, understand your own risk tolerance, time horizon, and investment objectives. And then invest accordingly.